here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Monday, April 5th, and we thought we'd come to you with a brief market update, kind of let you know what's going on out there in the markets. The answer is a lot of good things. The S&P 500 is currently at about 4080. This is the first time that we've talked to you guys during our market update about the S&P 500 being over 4,000. And it is solidly above 4,000, about 2% above 4,000. So, and that's really off the back of some very strong economic data that came in last week, particularly the jobs report. So the United States in March added about 900,000 jobs to the payrolls. That easily beat consensus expectations of about 660,000 jobs. And it's really something that's indicative of the economy starting to reflate. I mean, fully of those 920,000 jobs that we added, fully 280,000 of them were in the leisure and hospitality sectors. And it just shows those sectors starting to open back up and accelerate. For those keeping track at home, we lost about 8 million jobs due to COVID, peak employment to where we are today. Adding 900,000, 920,000 a month should get us back there in about 8 months, 9 months. So, kind of by the end of the year, which is fantastic. More than that, the unemployment rate ticked down to about 6%, which is great. We certainly like to see a number in the fours, sooner rather than later. And all of that speaks to, as we've talked about before, either in these commentaries or in market presentations, which you may have seen live. As we start to see more and more people get jobs, we start to see consumer confidence start to pick up. We see more consumer spending, and we get that sort of, beneficial feedback loop in the economy. More people spend, we get more economic growth. So that's all good. It has the market, in a very positive place. The bond market has also responded well. Yields are kind of flat. And we've seen the volatility index creep down below 20, which is the first time that we've seen that in a while. Volatility is kind of a measure of how scatterbrained people expect the markets to be over the next couple of months. And to see that level really tick down a little bit, just indicates that most market observers are taking this most recent set of economic data as a good sign that the economy, continues to boom and may continue to just sort of climb steadily upwards from where we are today. So good news on the economic front. We'll see how it holds throughout the rest of the week. As always, if you have any questions, feel free to reach out to either myself or to your advisor. I hope you're having a great Monday, and I look forward to talking to you again soon.